Hey guys, hope you are having a great day so far. Today we are going to go over the AMC earnings as well as some of the topics discussed in the earnings call. I am finalizing the other video regarding job reports and how they are becoming a bigger problem for the Fed to fix given that it's making their job significantly difficult in reducing inflation. It should be out sometime before Friday, but for now, let's talk about all news AMC, because there are a lot of important points we need to go over. Quickly before we start, I want to invite you over to my Discord. Here are some pictures of all the trades we have taken these past couple of days. We've been doing pretty good overall in our day trades. If you are someone that is looking to start trading options or someone with some experience looking for a very active trading room full of great alerts, come join my Discord and give me an opportunity to show you what consistent success is. Link will be in the comments and the video description. With that said, let's get started. AMC beat earnings, and there is a lot of positive news, but there is also a lot of ugly things in them. As usual, I will begin by simply stating the facts as they are and then later on weigh in on the issues I see at hand. Summarizing 2022, total revenues were $3.9 billion, compared to the $2.52 billion that was reported in 2021. Net loss decreased to $973.6 million, including non-cash impairment charge related to long-lived assets of $133.1 million, compared to a new loss of $1,269.8 million for 2021. Adjusted net loss was $727.9 million compared to an adjusted net loss of $1,191.9 million for 2021. Net losses per diluted share was 93 cents compared to a net loss of $1.33 in 2021. Adjusted net loss per diluted share was 69 cents compared to an adjusted net loss per dilute share of $1.25 in 2021. Adjusted EBITDA was $46.6 million compared to a loss of $291.7 million in 2021. Keep in mind all these comparisons were for the year 2022 and 2021. For the fourth quarter, total revenues were $990.9 million compared to the $1.17 billion for the fourth quarter back in 2021. Net losses increases to $287.7 million compared to net losses of $134.4 million in the fourth quarter of 2021. Adjusted net losses came in at $152.9 million compared to the adjusted net losses of $57.2 million for the fourth quarter in 2021. Net loss per diluted share came in at 26 cents compared to 13 cents for the fourth quarter of 2021. Adjusted net loss per diluted share was 14 cents compared to the 6 cents for the fourth quarter in 2021. Adjusted EBITDA was $14.5 million compared to $159.2 million for the fourth quarter in 2021. Net cash used in operating activities for the quarter was $33.3 million. Operating cash generated for the quarter was $57.5 million. Available liquidity at December 31, 2022 was $842.7 million, including $211.2 million of undrawn capacity under AMC's revolving credit facility. Now with these numbers out of the way, we can more or less establish certain conclusions. Though AMC did beat expectations set by analysts, the revenue for the fourth quarter is alarmingly low. Despite the box office success of Avatar and other movies, it still came down at $990.4 million, down from the $1.17 billion a year prior, more than 15% down. As discussed, losses widened, with AMC posting a new loss of $287.7 million, which was significantly steeper than the $134.4 million it took last year. AMC lost 26 cents per share compared to the loss of 13 cents in the same quarter in 2021. Now, let's talk about what CEO Adam Aron had to say. On the earnings call, Adam said AMC is demonstrating unmistakable progress along the multi-year report. He noted that AMC increased the size of their industry as it recovers, they outperformed their competitors, their agility in raising cash and reducing debt enhanced, and that AMC popcorn will be available for customers to purchase at Walmarts around the nation. Adam went on to talk about how theaters experienced an 82% decline in revenue due to the pandemic in 2021, which since then AMC has seen steady growth. Based on the box office numbers he went over, it is clear that there is a strong number of moviegoers that want to attend theaters. Adam Aron then noted their problem is that Hollywood has been releasing fewer movies as of late. He said the number of major movie releases in 2022 was somewhere between a third and a half fewer than the total number of such major films released in 2019 before the pandemic. However, AMC estimated that 30 or more movies will gross more than $100 million domestically in 2023, compared to the 18 that did so in 2022. That is an increase of 75% in the number of movie titles estimated to gross over $100 million. AMC saw their annual revenue increase by more than 54% year over year. He talked about outrunning their competitors, which in my opinion doesn't really mean much since AMC is pretty much the last big standing movie chain right now. There isn't a lot strong competition, but nevertheless, what he said is technically true in that the biggest competitor, Regal Cineworld, is dealing with bankruptcy in court because they ran out of cash last September. He then went on to state how they are excited to launch their popcorn with Walmart, which honestly is a great move by the company. Later in the call, he pressed on the big issue at hand, which is the shareholder voting on the various proposals. Last August, AMC issued over 516 billion APE preferred equity units as the dividends to holders of AMC common shares on a one-for-one basis. AMC successfully raised $314 million of gross cash proceeds and reduced their principal balance of their debt by more than $221 million. Adam, for some odd reason, decided to pick this moment to brag and dunk on naysayers and doomtellers, telling them to choke on that, as if APE dividends had a significant amount of proceeds that reduced their debt by a considerable amount. It was quite the opposite. APE has turned many investors away, people feel robbed, which they were, and it was not a home run move, even for AMC, but we have gone over that. I just wanted to say that was quite the cringe moment to boast about a victory when there was no significant benefit to AMC and certainly not for shareholders. But moving on, the AMC Board of Direction is presenting important proposals for shareholders to vote on at the upcoming special meeting on March 14, 2022. Adam claims these proposals are designed to protect the long-term value of a shareholder's investment in AMC while providing AMC the flexibility necessary to continue their recovery trajectory in these challenging times. Quick reminder. The two key proposals are, 1. To increase the number of authorized AMC common shares from 524 million to 550 million and combine the AMC common shares and APE preferred units. The second is to effect a reverse stock split of 1 share for every 10, which together with the increase in authorized common shares permits that automatic conversion of APE units into AMC common stock. Adam specified the AMC board and himself believe that this is in the best interest now of AMC shareholders to convert APE units into AMC common shares, therefore implying their capital structure and eliminating the gap between the prices of APE units and of AMC shares. The reverse split will create room to allow for the full conversion of APEs into common stock and that in his view, he believes that there is no compelling argument why AMC shareholders should generally be averse to the reverse stock split. He then goes on to boast about recovery overall and how they think 2023 will be a better year for them as a way to build confidence in the audience. Aside from more numbers and metrics given out, and some redundant questions answered, that was the gist of the AMC fourth quarterly earnings. AMC had a better year in 2022 than in 2021, that is undeniable. Comparing this fourth quarter to the previous one, even with great movies being shown, it was quite a huge miss comparatively. AMC's earnings were better than the Wall Street forecasts, and that's good. I think selling popcorn at Walmart will be a plus to their revenue, and if they expand to Target or Amazon or whatever other big grocery stores there are, it can only quite literally benefit the company overall. That is actually one of the biggest things I will be keeping my eyes on, seeing how AMC reports growth, sales, revenue and profits on this product. Adam Aron said he expects more showings in theaters this year compared to last year, a 75% increase by his own words. I truly hope this actually results in bigger attendances. My biggest red flag is that Avatar, The Way of Water, Puss in Boots and Black Panther, Wakanda Forever, did not have a robust impact on revenue nor profits. Yeah, AMC had a better year in 2022 than 2021, but not in the quarter by comparison. Another thing that has me questioning whether this 75% increase in movie output will result in larger revenues is that for a long time, Disney has been the main reason people have been going out to theaters. Seriously, DC movies, outside of a small bunch, have failed to bring people in. Almost no movies make a ton of money outside of superhero ones, with notable exceptions like your James Bond, Star Wars, Tom Cruise-led films or Avatar. There have been analysis made that clearly show that without superhero movies, all theater chains would have gone bankrupt already. The biggest concern that investors should have is that it appears that Marvel fatigue is setting in. We have seen diminishing returns at the box office in every single Star Wars sequel, and Phase 4 of the Marvel Cinematic Universe failed to bring people in. You could point out that Phase 4 had to deal with the pandemic restrictions, and that's a very fair point, but judging by audience reactions and the growing anti-Disney sentiment growing, the fact that Ant-Man, Thor, Doctor Strange and Black Panther all failed to break records or even meet expectations is kind of setting up the question about whether we are to see either further decline in movie-goers since fatigue is clearly setting in, or that if there will be a reduction in movie output in order for Disney to tailor higher quality in each film, which Disney actually recently confirmed they are planning on doing. We know DC is planning to launch a new universe with new actors, but still I question their ability to bring people in large numbers as they used to. For all the keyboard warriors already typing up a messaging calling me a shill, this is not to say things will be bad for AMC. I am merely voicing a very clear and objectively true concern about movie output and audience growth, which every investor should have in mind. There is not much AMC can do on this front unless for some magical reason they decide to follow my advice and either buy or build their own movie production house and start making relatively cheap movies, releasing them quarterly to boast audiences in and then releasing said films on their own streaming platform, which could result in cyclical growth on both the theater side and then on the streaming revenue side. I keep saying it, the key for their success is to ensure people do indeed have something to watch, and given their dependence on Hollywood studios like Warner Brothers and Disney, who have been increasingly releasing films on their own streaming services from day one, I would suggest AMC takes advantage now and starts making moves to offset or reduce any losses in audience numbers. Now, for the big and controversial portion of the video, before we start, please remember to voice your opinions and disagreements in my comments. I love reading through them even when we stand polar opposite on different topics. What I will not tolerate is any kind of abusive talk to either me or anyone else, so remember to act like a grown adult and not a 4chan incel with Cheeto stains on your shirt. I am upset and aggravated with the issuance of APE units, even after all this time. It was a dirty move by AMC to reach into the pockets of their most loyal investors as a way to reduce their debt. Doing so alienated thousands of people off the investment completely, barely made AMC money and set up a bad precedent. To the thousands, and yes I mean thousands, of people who disliked my opinions, talked smacked about me when I called this out ahead of time on the announcement date, and even worse, called me a fool for not seeing the 4D chess move by Adam Aron to expose shorters. Where are you at right now? I hope comments on this video are mostly from all the people who called me out for being the FUD master back then, because AMC barely made money on this, shorts were not exposed, AMC investors got shafted big time by this move and will not see a return on that money immediately either. All the things Reddit and Twitter AMC fans promised you did not come to bear, and now here we are, being forced into making a difficult decision about what is most convenient for us because Adam Aron and the rest of the board put us on the hot spot. If we vote no, APE unit price is going to tank, which means your overall investment into AMC will drop as well. Even AMC price will eventually begin dying off from this rally. But if the vote is no, the investment is going to certainly drop big time, which could actually be beneficial in a way. Let me explain. Where I have no problem voting yes is in the reverse stock split, because I strongly believe that the less shares there are of AMC, the more volatile it will become. The less shares, the more problems hedge funds will have controlling the price. We know many people are registering their shares on ComputerShare, which takes them off the exchanges, which further reduces the amount of AMC shares that big money can manipulate the price with. This also opens up possibility for volatility to increase and for demand to actually grow. If we vote no, I am pretty sure AMC board will be forced to ask their investors into voting again in the future, but that time it will have to be more than the 10-for-1 ratio. I think with the current proposal, there will be slightly over 50 million AMC shares. That number is already great, but imagine if it was like 25 million shares. With further AMC price manipulation driving it down, that would put hedge funds into serious problems. Any entity shorting AMC would be at significant increase in losses in my honest opinion. Regardless, the 10-for-1 ratio is fine as well and I do like that part of the proposal. Remember that there are two proposals. One calls for an increase in authorized common shares from 524 million to 550 million, and the second for a 10-for-1 reverse stock split. Both go hand in hand and if they pass, holders can convert their APE into common shares. This reverse split could open the door to as much as $22 billion in equity capital, according to analyst Eric Wold of B. Riley. Analysts in the industry believe that the votes will be there. However, you guys need to remember that several shareholders are suing AMC in Delaware Chancery Court to block this process. A judge yesterday set a preliminary injunction hearing for April 26, so even if we all vote yes to approve the measures in March, no action will be taken until after April 26. I hate that APE was made and issued in the first place, and now we are kind of forced to vote yes because the alternative will be to quite literally watch the price valuation for APE and AMC both deteriorate big time. APE was a huge L for shareholders and not even that big a win for AMC, and it has severed by trust in the CEO and board of the company. That isn't to say I don't see fundamental value in AMC, don't twist my words. Of all the meme stocks, AMC has the biggest chance at surviving from a fundamental standpoint. My grievances are with the board members, their lack of business creativity at turning things around and their callous action to implement APE to steal money from their most loyal investors. Still, my emotions aside, I don't see the benefit in voting no on this issue, but I totally understand people who will vote no. I personally am not decided yet which way to vote, so I cannot give you a yes or no at the moment. I have given you all the information you need to make that decision for yourself. I might not even vote at all on this issue, to be honest, given how wronged I feel about the whole thing. For now, I am undecided, though seeing the benefit of saving the current value of investors' AMC investment held a bit stronger with a vote for yes, while acknowledging that voting no will likely see a significant reduction in the investment. I hope this lengthy video served you well. Let me know your thoughts down in the comments below. If you are a day trader or are interested in becoming one, seriously give my Discord a chance. Join it. Come see for yourself what it's like. I promise it will not disappoint. We day trade SPY, and I post my alerts on my Twitter all the time for you to see how we performed on a daily basis. With all that said, I hope to see you on the next one, to the moon.